DailyFX BYOA contest for week 20, trading week of August 7th to August 12th, 2011. I'm looking at the USD Canadian dollar here on the 4-hour chart, and what I'm kind of seeing here is we're getting a bit of a pullback, right? So, lately, when we talk about the Canadian dollar, almost always when we're talking about the Canadian dollar, we need to talk about oil. Okay, so oil has just been getting pounded lately. Along with pretty much all the global indices in the world, just getting pounded. And we kind of got a bounce back today. Okay, so oil kind of climbed a little bit today, and you're seeing the Canadian dollar getting strong as well, right? Because obviously Canada is a major exporter of oil, has a ton of reserve in oil, so it's very sensitive to price fluctuation. So what I'm kind of looking at here is I'm looking at a possibility of, again, going long on this, but just doing it at a better price and a nice zone of confluence. So what I mean by confluence is this: we had a nice run up, nice bullish move from down near 94 up about 6 cents to even with the Canadian dollar, so being a dollar to a dollar. And now we're getting a pullback. Now, what I think is going to happen here is fundamentally risk is in a very very sensitive spot right now. We don't know if risk is on or risk is off. I mean, lately it's been off. Today it was most certainly on. Aussie getting a good bounce, Kiwi getting a good bounce. The riskier currencies, higher yielding currencies, got a good bounce from today. Equity markets up 4%. Dow 403% or 430 points. So basically, risk seems to be getting a little bit of life today. But if you look at the overall trend, it seems like we're probably going to be continuing on this level of risk being off and oil continuing to drop, and maybe kind of getting to a point where it'll just stabilize and not continue to drop any much more than, say, $70 for a barrel or something like that. So getting in long here is going to give us a good chance to get in at a point of confluence. What I mean by confluence is this: we had that nice move up from 94 up to a dollar. That was a 6-cent move. Now we're getting a pullback. Now the pullback is coming at kind of a zone where we have about 3 different things showing us that we're going to hit a good level of support, and it's going to prevent us from falling any further. And these are always the levels that you want to buy in at or sell in at. Okay, you want to look for these levels on charts. We've got multiple things showing you that this point on the chart is got a ton of resistance or support to support whatever trade you're going to take here. Okay, so we've got this horizontal line at 97.6. We've got about 3 or 4 or 5 different instances of us bouncing off of that, so we're using that as a solid level of support. So obviously you can see here, if you want any more confirmation, I'll just zoom in here and see what I can do here. We closed above it, right? So we closed above it, and then we kind of consolidated and had another breakout. To me, that shows that this is a very solid level of support, considering we had that nice congestion zone after it and then another breakout. We've also got the Fibonacci. Okay, so if we take this move that we took from the 94 level up to the dollar, that was a 6-cent move. The 38% retracement would bring us back here to this same level. Okay, so this almost 97.7, so very, very close. And then we've also got the ascending trend line. So these 3 things are pointing to me that this is going to be a very solid level of support. Now, it is possible that we do get an intraday break through here. That is very, very possible. But we're looking for closures above it and within this zone. Okay, so for me, I'm not quite ready to buy it yet. I would like to see it possibly test this trend line. That's just me taking a much more conservative point of view. But I could definitely see someone that wants to take a little bit of a risk on this, maybe use a smaller lot size in the betting. I'm definitely jumping in right now. The worst that could really happen to you is you jump in right now and you put your stop loss down around 96.8 or so. Okay, and that would give you enough room to support any intraday breaks possibly through this trend line, but still maybe a support of it. Okay, so honestly, I think it's a pretty solid setup. It's got a lot of upside, especially with what's been going on in the global markets. I mean, if we're entering into a recession, That's definitely going to lessen the demand for certain commodities. Oil is especially sensitive to that. It's especially sensitive to us going into a recession. I mean, I remember back when the whole Lehman and AIG thing was going on. I think if I remember right, I think oil was down around $30 a barrel. So, honestly, when a recession like that can pick up, I mean, you could really see this oil take a big hit. Now, do I know if that's gonna? I don't think we're gonna, go through another AIG Lehman thing again. But I do think that the fundamentals on a global scale are really showing us that a recession at this point is a much more serious threat than originally thought of. Okay, I mean, uh, the markets don't just fall off a cliff for no reason, and we've got a lot of bear markets going on in the world right now, in Germany, Russia, to name a couple. It's really one of those things where it's kind of like a snowball in my mind. I mean, it's like a big snowball, rolling down a hill. I mean, you just it just picks up momentum and it's hard to stop. So again, I think today's rally in the markets was a good deal for us if we want to get in and buy again on the USD Canadian dollar, and we'll see how this one pans out. Okay, so thanks for watching and good luck trading this week.